Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. It is Monday, the 3rd of February. Into a new month we go. Hopefully you had a great January. It feels like it was New Year's yesterday. We are going to take a look at Tetra Tech. This is out of the industrial sector. This is one I have not looked at previously, so hopefully it's a good one. Now, for those of you who may be stopping by for the first time, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday. We take a look at a company stock that's pulled back on the day, see if it is presenting any value. We run it through my screener. We'll see that screener here in a second. And there is the thanks button down below for those of you who might want to buy me a cup of tea. Really appreciate all the viewers and subscribers to the channel. You guys are awesome. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. This is the screener we will be running through in this video, and you'll see here highlighted down below, we do add in price to book whenever we're looking at financial companies, something like a bank or an insurance company out of the financial sector. It must meet 6 of 9 then, but for this company, we'll look at 5 of 8. So the top 8 here is what we'll be running through in this screener. Just because it makes it down on my watch list does not mean I am investing per se. It just means I am interested in doing a deep dive into the financials of the company, and only after I do a deep dive into the financials of the company, meet some other criteria that I'm looking for, I do a discounted cash flow analysis, figure out what I'm willing to pay for or a range I'm willing to pay for, and once it gets into that range, then I buy. So again, just because it makes it on my screener doesn't, or on my watch list passes the screener, does not mean I am buying. So don't run out and buy any company that makes it past my screener without doing your own due diligence first. All right, back to Tetra Tech. You can check them out on their homepage. That's where I pulled this information from. That is www.tetratech.com. That's www.tetratech.com. That is their homepage where I pulled this information from. Tetra Tech was founded in 1966 to provide engineering services related to waterways, harbors, and coastal areas. For more than 50 years, we have substantially increased the size and scope of our business and expanded our service offerings through a series of strategic acquisitions and internal growth. Today, Tetra Tech is organized into 2 major business groups that align with our core markets and enhance the development of high-end consulting and technical solutions to meet our growing client demand. We provide clear solutions for projects in water, environment, renewable energy, sustainable infrastructure, and international development. They run through 2 different branches. They have their government service group, GSG, provides consulting and engineering services for a broad range of U.S. government clients, federal, state, and provincial and municipal, and all activities with development agencies worldwide. Commercial International Group, CIG, provides consulting and engineering services worldwide for a broad range of commercial and industrial clients, inclusive of the commercial and government sectors. So, right, they have their government, commercial side, and they really are around, projects for waterways, environment, renewable energy. So you might be some of your wind power out there, solar power, stuff like that, sustainable infrastructure, and international development. So, I mean, seems like an engineering business that kind of has their hands in a few different avenues there. Several of them being ones that are going to be around for quite some time. I think the environment overall, water's not going anywhere. Renewable energy seems to be the way of the future. Sustainable infrastructure in general is not going anywhere so long as we have cities and large municipalities. And then international development, again, I don't think this is one going anywhere. Just how fast are they growing their business, and do the numbers make sense, really? All right, the reason we're taking a look at them, down 7.04% on the day. Big drop on the day. We are talking about Tetra Tech Incorporated, ticker TTEK. This is, again, out of the industrial sector. Closed out the day at $34.21 per share. 52-week range as low as $31.09, as high as $51.20. They are within 15% of their 52-week low. It needed to be $35 and around 75 cents or lower. So they are just within 15% of their 52-week low there. A market cap of $9.17 billion, so a small cap company here, beta of 0.94, just slightly less volatile than the overall market. PE ratio seems extremely elevated at $36.01, and maybe that's why they're starting to see some pullback. Maybe they were on the high side, again, at $2.59. So they weren't really close to their 52-week high before the drop even, but that does seem like a pretty high price earnings ratio, so the company would have to be growing pretty fast to justify this. EPS, earnings per share, is at 95 cents per share. Earnings date is coming up sometime between April 29th and May 5th. Forward dividend is 22 cents. I believe this one is a quarterly payer. So divide by 4, though we will see that here at the end of the video here, what they pay per quarter. Starting dividend yield of 0.53%, so very low starting dividend yield, which isn't necessarily a bad thing if they are growing it fast enough. Ex-dividend date, November 27th, so we're past that. Looks like they're going to pay out on February 26th, so they'll pay out this month. But unless you owned them on the November 26th or before, you will not get this February dividends. So if you want to get another dividend from this one, you can buy them now, but you're going to have to wait a couple of months to get it, a few months to get it. 1-year target estimate, at least according to Yahoo Finance, $44.17. So at least according to Yahoo Finance, they see some upside, but not quite getting back to its 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if there is potentially any undervaluation. To do that, we look at their 5-year dividend yield average, 0.59%. We compare it to its current, 0.53%, or over here where it says forward, 0.53%. And since their current is lower than their 5-year average, that actually speaks to overvaluation. So at least according to dividend yield theory right now, this one is potentially overvalued, slightly overvalued, really close to fair value. Again, at least according to dividend yield theory. Very low payout ratio on this one, 19.81%. So a lot of room to continue to increase that dividend, make acquisitions, reinvest back into the company, buy back shares, and raise the dividend over time, which we want companies to be doing with their free cash flow. Now, dropping down to free cash flow, I want growing free cash flow over time because, again, if it has growing free cash flow, typically it can do all of those other things we just mentioned. Going back to September 30th, 2021 here, you can see $295 million in free cash flow. September 2022 up to $325 million. September 2023 up to $341 million. But then here in September 2024 looks like a bit of a drop, not a huge drop, but a bit of a drop down to $340 million. Now going back here in time, in 2022 they did repurchase $200 million in shares as well, and $60 million in 2021. Nothing over the last couple of years though. Now, jumping over to stockanalysis.com, this is just another source I go to for information. You can pick any sources that you like. I just recommend more than one so you can make sure the information you are getting is accurate and up to date. It's just a back check on the one source you might like the most. 2, if not 3 sources is what I look at least 2, but like I said, sometimes 3. If the 2 don't jive, I look for a third to make sure I can see what's going on. You pick any sources that you want. That's up to you. Now, 4 analysts have taken a look at this. They call it a consensus buy. They have a low estimate of $45. It currently sits lower than their lowest estimate. If it was to come back up to that $45 low, that would represent a 31.54% increase from where it currently sits. Average estimate of $47.70, pretty close. These low and this average are pretty close to what we saw with Yahoo Finance on the previous page, also around 44. So really the low is pretty close. Average of $47.70 would represent a 39.43% increase from where it currently sits. And if it happened to hit their high of $52, which still would not be another 52-week high, that would be just under the $54 52-week high currently, and that would represent a 52.0% increase from where it currently sits. All the while, you could collect that minuscule dividend that they do pay. Now, jumping into statistics, I like to look at return on equity and return on invested capital to see how well the business is reinvesting back into itself. And I like 10% or both for better of these metrics, or I like 10% or higher for both of these metrics. Return on equity is sitting at 16.05, so over the 10% I'm looking for there. Return on invested capital, 12.32%, again, above the 10% I'm looking for there. Earnings per share growth, I like 5% or better forecasted over the next 5 years. They're sitting at 14.47%. Very nice. And with revenue growth forecasted at 6.4%. Now looking at their dividend history, again, they are a quarterly payer. Payout ratio is at 24. They're saying 24.39%. We had 18 from Yahoo Finance, so take that with a grain of salt. With dividend growth of 11.54%. Very nice double-digit dividend growth. They're saying 1 year of dividend growth. I don't necessarily agree with that. We'll see that here in a minute. Why? Buyback yield is negative. We don't like that. So whenever they are buying back shares, they're not doing it at a very opportune time. We want to see that positive. Shareholder yield is negative as well at 0.21, but almost flat. So we'd like them to improve the buyback yield and the shareholder yield here, but that sometimes takes time. Now, they do pay out on the February, June, September, December timeframe, which is off schedule for most other companies. Now, going back in time here, May 2022, you can see here they were paying 4 cents and some fractions of a penny. Now, this August 2022 payout, 23 cents. This looks like a special dividend. I actually went back further. It does look like every now and again they just pay out a random higher dividend. and it's usually around the 23 cent range. So they are just paying special dividends, but they are slowly growing this minuscule dividend that they do pay. Maybe it makes it a little juicier whenever they pay out these special dividends, but that's something to keep an eye on with this one. November 2022, they're still paying that 4 cents and some fractions of a penny. They raised it up May 2023 up to 5 cents and some fractions of a penny. Raised it up again in May 2024 to 5 cents, and some fractions of a penny still. And that's where it remains. But like I said, they do from time to time pay out what looks like to me a special dividend here. If anyone owns this one, let me know. This is, like I said, this is not one that I've looked at in the past. All right, let's run through the screener here. Understand the business. That's where we started, right? They are an engineering firm that has their hand in a lot of different companies where they're offering their services, whether that's management services. I'm sure that they do some kind of consulting services as well. But again, if you want to know more about that, check them out on their homepage. That's where we started. They did have the 1 year of down on growing free cash flow, even though it was slightly down. They still don't get the check there. Growing dividend, yes, they do have a growing dividend. So check there. Nice double-digit growth on that one. Dividend payout ratio is very low, right around 20% or less. Check there. So it's definitely under 75%, where I like it. Check valuation based on dividend yield theory. Dividend yield theory says it's actually slightly, just ever so slightly overvalued currently. It is within 15% of a 52-week low, so check there. Return on invested capital and return on equity are both over 10%, so check there. And earnings per share growth is very high at over 14%, so it's above the 5% I'm looking for there, so check. 1, 2, 3, 4, 5, 6 of 8. This does make it on my watch list. Seems like an interesting company. Not one that I've looked at in the past, but Tetra Tech is the name. Ticker TTEK, and they are out of the industrial sector. If anyone owns this one, let me know what you think of it. How long have you owned it? Is that a special dividend like we looked at there? I believe it is, going back through their history, but would love to hear from someone who actually owns this one, if there are any of you viewers out there. All right, that's it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. And don't forget to hit that notification bell. Drop a comment down below. Any of you out there that know Tetra Tech, again, would love to hear from you. What do you think about the company overall? How long have you held them? And was that a special dividend like I asked already? Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Not that presentations should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.